when it comes to China, does it again provide this counter-cyclical force to the rest of the emerging market asset class? Does it act as an anchor, given that we are still expecting gains for the economy and more gains for markets there as well?
I would agree with that. I think when markets have major issues, you would have some companies taking more of a spotlight. And I think for China, definitely a very strong cyclical upturn that we're anticipating after 3 years of fighting pandemic. And I think the EM investors are willing to hold till 2Q to see the numbers to come through. And then I think more broadly speaking, when China reopens, it has a very positive spillover effect to many parts of the EM, and very notably in Hong Kong, in Thailand, Singapore. This is the uplift from the tourism spillover, and then also it has a broader impact on the materials demand and then commodities demand.
Is China cheap enough now to sort of offset its fundamental issues around the property sector, around really the uncertainty that comes with government crackdowns?
When we look at MSCI China, if it's below 9 times 12 months forward PE, it is a screaming buy. And we had that in October last year. And then JPMorgan was pretty early in calling clients to position for the easing of mobility trade in the first week of November. At this point, it's closer to 11 times. Our bullish target for the year is about 12 times. I think pushing that beyond 13, 14, people need to have a very different view on the geopolitical risks. But within that range, I think there are a lot of investment opportunities.
You mentioned other markets that might benefit from China's reopening. How does Korea and Taiwan really play into that calculation, given, of course, we have seen a lot of pressure on the export side of things?
Yeah, good question. I think when we look at Asia ex-Japan, China is a market that trades at a bit of a discount because various concerns, but cyclical upturn is very impressive and the fund flows are coming back. Korea and Taiwan are deep cyclical markets tied to the global tech cycle. Now, when we look at the downgrades in tech earnings, they're down about 30% from peak to where it is over the past 2 years. And so that is consistent with the typical drawdown in earnings in other major tech cycle correction. So I think at this point, there is confidence that the earnings have been sufficiently cut, and there's going to be a rebound. And so within Asia, ex-Japan, China's earnings troughed the first and started to recover in October. We think Korea and Taiwan, they're troughing to a significant level and ready for a rebound, whereas South Asia, including India, they're still in that troughing process.